Hello and welcome to another update video about FETCH.AI FET. We take a look at this chart from an Elliott wave perspective, which is an analysis method that is based on market sentiment. It allows us to understand targets, support areas, resistance areas, and it gives us a roadmap for the most probable scenarios on the chart. So it takes a lot of time to learn, takes a lot of experience. It frustrates a lot of people. But that's why we're here, to give you our best view of the price charts, so you don't have to learn it. Well, you can if you want to. And if you want to learn it, or if you want to find out about the Elliott wave structures for different cryptocurrencies, make sure that you subscribe to the channel. There are additional updates every single day. Now, let's take a look at the chart here. This is the daily time frame. And we can see that this chart is probably in the late stages of a larger rally. I see this here as a C wave to the upside. So there are certain patterns in Elliott wave. This here is seen as an ABC structure for various reasons. Explaining all that would maybe go a little bit too far now. But what is important to understand is that a C wave would likely end a larger cycle. There could be a large correction afterwards. We don't know that yet, but the risk will be high up here. But for now, there is still some upside that we're expecting. And the idea is that this is a 5-wave pattern, because every C wave has 5 waves. That's just one of the rules. And we already completed, and I think this is clearly visible, a wave 1, which is the first move up. We have the wave 2, which is the higher low, which is correcting the wave 1. We completed the wave 3 and possibly the wave 4. Each of these waves comes with their own parameters. They've all been respected. The problem is that this upside wave 3, which topped in March, was a little bit short. The wave 4 was okay, but that the wave 3 was quite short indicates certain weakness. But we'll still focus on higher as long as support levels are holding. The main support area here on the daily chart is between 52 cents and 75 cents. And we would like to see the market reach $6.20 plus. That's the 100% extension of the initial A wave to the upside. That is a very common target for a C wave. Higher prices are, of course, possible, but the $6.22 level is the first key milestone target. There is likely going to be some resistance around the $4.85 level, because that's one more Fibonacci extension level which is relevant. Now, looking at the microstructure now, you can see that the idea is that the 4th wave already formed a low. We're now in wave 5, which is most likely in itself an ABC structure. And the A wave is expected to unfold as a 3-wave move as well, ABC. We could now be in the early stages of that C wave to the upside. So we will take a look now at the smaller time frame chart. That gives you an idea of the roadmap really on the smaller time frames. And if we say this C wave to the upside is unfolding, I just showed it to you, then you can see here that this again would be a 5-wave pattern. And we completed waves 1 and 2 already. Wave 2 bottomed in December. The fact that it formed a higher low indicates there's a good chance an uptrend is unfolding. Now, I have to say this is not a pattern I have a lot of confidence in, because it's all based on 3-wave structures. 3-wave structures don't give us a lot of confidence. We have a lot of overlaps, the structure looks weak, and the pullbacks have been very deep. It just doesn't make a really good impression. However, as long as the market is holding above the red line, I am looking for higher prices. And best I can tell is now that we are moving within a 3rd wave within that C wave. And I don't want to make it too complicated, so I'm not going to dive too much into the microstructures. But the idea is that a substantial low formed on the 13th of January. That was again another higher low, barely a higher low, but it still formed the higher low. As long as that level is holding, we're watching for higher prices. Next upside target area between $1.69 and $2.15. Especially this should be reached as long as the price holds above the Thursday low that printed around $1.30. So I'm watching for higher in the short term. Below $1.30, the lower low or the lower support level here is relevant again at around $1.09, which is the swing low that formed in November. But overall, we're watching for higher prices, but we have to be cautious here. That's the update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.